Welcome back to Teshkid FX for another quant price prediction update, and in this video I want to give you the short-term and the long-term scenarios that I'm expecting to play out here on the quant chart, basing my analysis on the Elliot structures and the Fibonacci's, and allow me to kickstart the video here on the daily chart by giving you a brief of what has been happening here on the quant chart. Quant from the all-time high had been seeing no prices in this massive ABC corrective structure, which took us back to around the $40.1 mark, and after seeing that low we had been seeing a bit of a bounce to the upside in a movement that had been obeying the EBOOK structures, which is better seen here on the forward chart, where you can see I have this EBOOK structure in blue, where I have the wave 5 making its peak at around the $229 mark, and also completing the formation of a higher Elliott wave count 1 to the upside. And whatever we expect next after seeing the formation of a higher Elliott wave count 1 to the upside is the formation of a second wave, which is a corrective wave. And once we complete the formation of that second wave, we can expect an impulsive movement to the upside in the formation of that higher Elliott wave count 3 to the upside. And there are chances that we might not have seen the low for this higher Elliott wave count 2, which is right here. And getting a little bit into the details of the formation of this higher Elliott wave count 2, which is right here, we have a chart pattern that is in formation here on the forward chart, which is a bear flag, and this is a trend continuation pattern which has now started to give us a breakout to the lower side. And in that movement we also lost the key area of support at around the $110.9 mark. We even saw a retest here on the forward chart of that key area of support and continued pushing a little bit lower. And in the formation of a second wave, which is a corrective wave, we also expect to see an ABC corrective structure play out in the formation of a second wave. And I believe that is the first thing that is going to give me the short-term scenarios that I'm expecting to play out here on the quant chart. And having that ABC corrective structure, we can have these as the wave A. Then right here, this is the formation of that wave B. Then whatever we are seeing over here is an impulsive movement to the lower side in the formation of that wave C, which should fully maximize the formation of that higher Elliott wave count 2 to the lower side. And using the trend-based Fibonacci to sketch out a minimum target area to the lower side in the formation of this wave C by connecting the trend-based Fibonacci from the high of that wave A to the low of the wave A, then dragging the fibs to the low of that wave B. That gives me a minimum retracement area in the formation of that wave C to the fib level 1.618, and that perfectly lies at around the $88.5 mark. And that would suggest there's still one more low that is coming our way here on the quant chart for us to say that we have completed the formation of this higher Elliott wave count 2. And once that happens, then we can expect an impulsive movement to the upside in the formation of this higher Elliott wave count 3. And in case we continue seeing a breakout out of this bear flag that we can see here on the charts, there are chances of fully maximizing the fib level 1.618, and that is at around the $88.5 mark, and that is my minimum target area to the lower side in the formation of this wave 2. And getting to the 1 hour chart for further analysis and also give you some chart patterns that you have information over here that are still giving us short-term scenarios. You can see we have this head and shoulders pattern, which is right here. That is a chart pattern that normally breaks to the lower side, having the minimum target area of the breakout as the height between the head and the neckline, and I can get that height and then place it below the neckline, giving me a minimum target area back to around the $91.9 mark, meaning in case we continue seeing the breakout, there are chances of fully maximizing that target area at around the $91.1 mark. And once you fully maximize it, then there are chances that that might be the low for that high Elliott wave count 2, or maybe we can continue pushing a little bit lower and fully maximize the fib level 1.618. And here on the 1 hour chart, if I zoom in also, we have a chart pattern that is in formation right here that also suggests a bit of a short-term bullish movement. And if I connect these lows right here so that I can draw out the chart pattern, we can connect those lows so that we can have a bottom down there, because the chart pattern is a double bottom, and then I can draw it out having that as the first bottom. Then we saw the formation of the neckline, then we saw the other bottom in formation right there, and there are chances we might manage to break above the 20-day MA and continue pushing a little bit higher, get back to the neckline area. And once that happens, then I'll be expecting a breakout very soon. And this is a chart pattern that can break to the upper side, having the minimum target area of the breakout as the height between the neckline, and the bottom, so I can get that height and then place it above the neckline, giving me a minimum target area back to around the $115.5 mark. So those are the two possible short-term scenarios that can play out here on the Quant chart. We either continue pushing lower and fully maximize the fib level 1.618 in the formation of that wave C, which should fully maximize the formation of a higher Elliott wave count too, or maybe we can just have a bit of a corrective, that is a bit of a short-term bullish movement, and once that happens we still need to make a new low in the formation of that higher Elliott wave count too. So let's be patient and see how that plays out, and I'll keep you updated on that. Also taking a look at the indicators here on the 1 hour chart. On the 1 hour RSI we are trading at around the 45 mark, meaning we have massive room for us to support any movements to the upper side. Also taking a look at the MACD, here on the MACD we have been able to print a bullish cross, and that means higher prices are coming our way, and that would support that short-term bullish movement, giving us the breakout out of these double bottom that I have right here. So let's be patient and see how that plays out, and I'll keep you updated.